Hey guys, it's Max. Good morning or good afternoon. Now it's 9:53. So if you're on the East Coast like a lot of you are, it's 10:53. Jackson, you're gonna have to calm down for a second. Jackson, it never fails. He tacked up whenever I go live. All right, so let's share this screen and see what in the heck is going on. Where is the darn chart? There we go. All right. The SPY was grinding this morning when I looked. Oh, look, it's on the highs of the day. That's interesting. I mean, that's good. Okay, well, it's hard to see because I zoomed out, but today's action is just it's just these past three bars right here, but we're already above yesterday's range. So that's good. As long as we can stay above yesterday's range, we should be fine. The next place that I would see sellers step in is between 578 and 580 on the SPY. And they may not. There's no guarantees, but it might be a place you might look for them. However, this whole area also might be a place you might look for them, because I'm going to put this on let's step out to a daily chart. Okay, I tried to make it a different color, this box that's green, because it's a go, no-go area, because it's literally the Trump election gap. So the market's had a huge gap up and got over that, and then for the next couple of months, every time prices got into there, tons of buyers, great places to buy calls until early March, and then we slid right through it, and we also slid under the 200-day moving average. Well, we've since crossed back above the 200-day moving average, but we're also coming back up on the thing that was supposed to be support on the way down. So there could very well be people that sold here that could want to defend this area. So I know it's green just because I was trying to make it a different color, but it really should be yellow. Yellow just didn't show up well. But this is a huge zone. If bulls can get it over this zone and keep it over that zone and turn this into a bullish territory, my gosh. But bears are going to fight them hard on it. So I would expect lots of chopping in here. I wouldn't expect to slice right through it. And I would also expect 578, 579 maybe for it to pause and go the other way. If not there, then very possibly at 583. But anyway, we'll see. We'll see. If you look down here, just the way the flow of the market's been going, look how many areas below the market. We have 1, 2, 3, 4 areas of support, or 5 areas of potential support below the market. And we have 1, 2, and I don't know about this top one. I'd have to go down to the shorter time frames to see, but depending on how you count it, only 3 or 4 areas of resistance on top of us. Of course, in a true bull market, there won't be any resistance. So of course, we aren't there. We aren't anywhere close to there, but I just always look at how many open gaps I have, or so how much support I have below compared to how much resistance I have above. Anyways, just one thing to look at. All right, so Qs. You guys probably want to hear something else. I'll get in let's do the buffer report and see how the funds are doing. But man, that chart looks great. I just love, when you're above yesterday's high, if you're a bull, that's the first thing you want to do is get and stay above yesterday's high, regardless of all these other areas on the chart. Just that's a great step for bulls. But then, in addition to them being above yesterday's high in the Qs, the election gap there, it's the same deal. They're right here at the go no go zone because they've approached the election gap area from below this time, and I'd actually expect sellers to be there because the first time anyway, or to put up a fight anyway. But we'll see. We'll see if it goes right through there, that, if it goes right through there, that tells us something else. But anyway, I wouldn't expect that to happen. So that's Qs. Now let's look at Russell. Russell is not over yesterday's high. Russell is acting weaker just on a comparative basis. Let's kind of zoom in here. Russell is trading within the previous day's range. But now but we have an area on Russell. If you're a Russell trader, if we got down to the 206, 205, something like that area, the first time anyway, we might see buyers defend that area. If I was going to take a position like a position in Russell, I might wait for it to pull back a little bit. No guarantee that happens, if because the other indexes are darn sure are not pulling back. All right, yeah, and SPY is also above yesterday's range. Okay, so now let's check gold, oil, Bitcoin, all the other ones, just on the daily bars. Gold is gold's making a higher low than yesterday and a higher high, but we'll see. So gold looks strong. Plus, I looked at Tasty Trade and my GDXY was looking good. So let's see. Oil's looking good also. Oil on the daily chart has been, or USO. I always call it oil ETF. All right, now let's look at Bitcoin. Let's see, Bitcoin to dollar. I used to show Bitcoin futures, but somebody asked me why, and it doesn't make a lot of sense. I'll just show Bitcoin to dollar on Coinbase. That's probably a pretty liquid market. Now, I wanted to drill down on, Bitcoin looks really bullish. It looked really bullish last night. I don't have, especially in the shorter time frames. I was looking at a chart last night. I wanted to show you guys. Thought about going on live last night, but I never did. But yes, okay. This was the chart. So Bitcoin, it was in the time frame I trade was trying to revert to mean or building out a huge high volume node at 84,000, and we really don't want it to revert to there. And we're building a new node at 88,000, and that's good to see. And then, even if we have a sell off, hopefully they buy it before then, and then I'm hoping Bitcoin can put on new highs. I mean, that's what else the bulls really want to see. So let's look at Bitcoin to the dollar. Bitcoin's been leading the way the past couple of days, but who knows? By tomorrow, this could all peter out. The sellers could be back, and it could be running the other direction. I mean, the buyers are in control right now. It could change fast. So here's the Bitcoin daily chart, and it's still in yesterday's range, but of course, it's been on this has been on a vicious rally on the daily chart here. Like I say, at some point, the bears will break that trend line. I mean, it happens every time, and prices will go lower. We'll see. Hopefully they'll make a higher low at that point. I mean, if you're a bull or if you aren't a bull, I mean, look at it in this context. If you aren't a bull, that's a bear wedge below. I mean, that's, if you're a bear, and you look at this whole move and you look at the retracement, that's not even a third. That's that's just a bear could look at that as a bear wedge, or hoping it turns into one, hoping we make a new low. All right, let's look at some other stuff. Let's look at, for one thing, let's look at the model portfolio. Let's talk ETFs now. Okay, so YQQQ. Well, I guess this is the best column to look at it. I've got to work on this chart. YQQQ, I changed some of the share counts because some drips happened. YQQ is 23% of the portfolio and is costing me 8 basis points today because YQQ is actually down. The ETF is down 35 basis points. GPTY, on the other hand, is it's making me 1 basis point. Great job. Okay. When what is it's probably about flat. Yeah, it's up a nickel on the day. But look at Alti. Alti's up 33 bips. Or no, Alti's actually up 1.5. GDXY is up 1.9. Zomo's up a 1/4 point. Now Fiat is down 2% basically. Dips is up a percent. Anyway, it all adds up. I'm up 61 basis points. The market's up 34 if you were all in SPY, or 24 if you earn a 60/40, just for comparison purposes. But since inception, the market's spanking me. So be that as it may. All right. So now let's look at the buffer report. Let's see what's going on over here in buffer land. I don't know why it's taking so long. Hey, Martinez, what are you doing? I hadn't seen you around in a while. It's good to see you. Good to see you. Are you in my Discord, Martinez? Anyway, I don't know if you do Discord, but you should join us in there. It's pretty fun. We have a good time in there. Anyway, thanks for being here. It reminds me, I need to post the link for anyone who's listening. Norman, thank you so much for being here. You didn't mind my late start because, well, it's just interesting. I love being on the West Coast and being involved in the market because when I get up early out there, when I was at my dad's house, but I'd be up at 6 or something. Well, the market's already 8 everywhere else. So I just love how everything starts early out there because it ends early and you have those beautiful West Coast afternoons. Hey, Dan, thank you for being here. All right. We have an Alti fan in the house. Alti doesn't get enough love. I don't know. I mean, I love Alti myself. It's one of the main reasons back in the model portfolio. Let's see, it was kicking butt for me today. It's making 16 bips for me. Now GDXY is making 31 bips. I mean, my inverse, my hedge is costing me 8 bips and 4 bips. Somehow I talked myself into playing inverse Coinbase and inverse NVIDIA. But anyway, we'll see how that works out. It's a small percentage. All right. So anyway, so let me, enough about me. Let's see what's going on here on these grids. All right. So this is the GPTY grid. GPTY, this is just a great day, about 2/3 of them up. About 1/3 down. This would be a great average day. So that's GPTY. Now let's look at Alti. Okay, Alti has this one Oklo that's down, but gosh darn it, I just remembered I fell asleep last night before I put the new positions in. Anyway, the important thing is the average is only down a 1/4 point, and there's other positions that are offsetting it. So this right here would be all right, here's the LFGY verse. LFGY is only up 3 basis points. It's having a little bit of a problem. Okay, so let's do this. Let's go to the index buffer report. I should have gone there first. Always I should do this one first. Get a general view of what's moving. You know what I always say, up the most or down the most, feet and 5E, right? Yep, feet, 5E. It's that concentration risk or concentration, not risk. It's a bonus if you like. If you want that. Okay, FEPI's also doing really well, up 58 basis points. Triple QT's doing well. And Alti's doing well. We'll look at Alti in a second. I wanted to drill down on Alti, but let's finish these buffer reports. THTA looks good. XOVR looks good, but it's early, and these moves aren't too big. This SPY is only up a third of a point. It just, on the bad list, if there is any, it's IWM I and Y are pulling back a little bit. But like I showed you, the Russell is still trading within yesterday's range. So we wouldn't expect those to be as bullish as the ETFs that follow the NASDAQ or the SPY. And sure enough, the NASDAQ ones are particularly lit today. Triple QI's up 55 basis points, outperforming the parent. Triple QT's doing well. GPIQ is a fund I don't talk about often enough from GPIQ from Goldman. But in any event, it's very similar, somewhat similar, I would say, to compare it to the JP Morgan or a Global X. But it's a great fund, super steady, gets a lot of upside. Triple QI is a really great fund. All right, so anyway, I'm going to stop talking about funds. Let's look at, I want to drill down on Alti. We're going to look at Alti here in just a second. This really doesn't look too exciting. I mean, it looks like in yield max land, GDXY, InFly, and FIBI are where you want to be today. All right, so let's do this. Let's check out a little Alti. Sorry the show's a little bit late this morning. I stayed up late working on a bunch of stuff, and I started a bunch of projects, didn't get any of them finished, but it was up till about 2. All right, so let's check the Alti versus what's a good comparison? Well, I think maybe WiMAX is a good comparison, or yeah, we'll just check Alti to WiMAX. I really like WiMAX. Okay. So since inception, which is Alti's just about 13 months old. So since inception, WiMAX is spanking it. Now let's go since the formula change. The formula change was on my birthday, mid-October. I remember it because I remember, oh yeah, it's gonna be on my birthday. I mean, that's how I still remember it months later, and I can't remember anything else. Is all I'm trying to say. All right, so okay, now this tells a little different story. WiMAX is still beating it now, but let's look at the bottom chart. Now, I never look at the top on this. I always look at the bottom one because this is just taking the dividends as cash. Reinvesting them is cool if you want to do that, and you get a little better return, whatever. But it also kind of is, I don't know. I just like to take them as cash because this way you can spend them. You can do this guy down here is somebody that maybe spent his dividends or something. That's the way I look at it. All right. So Alti's total return. I mean, WiMAX is beating it a little bit on total return, but look at this. So 44. So it's almost half a year. We'll just call that half a year. So that would be $8.28 if it was a full year. The price right now is only $7, $6, maybe $7. I mean, my gosh. So that's, effectively it's high. Now let's look at WiMAX. WiMAX, on the other hand, is paid $4 for half a year. So we'll call that $8 for a whole year. And it's not quite a whole year, but I'm using the same number on both. So if it were, so it's $8. So 8 on something that costs 14 is also impressive, to say the least. All right, but yeah, WiMAX is doing a little better. Now let's check that. I want to check one other thing. Let's check just in the pullback. We're going to check a lot of them in the pullback. So the pullback started, or the highs were set. Another day I remember was the day I bought my YieldMax portfolio, or it was right around December 15th, and it was right pretty much the high of the last market. So let's check it. Let's see how they've done off the high. I don't know. This is interesting. Alti's almost got it just off the high. I mean, Alti's hanging in there, but all right. So now let's check this. Let's check. let's check. Let's check QDTE versus YMAX. QDT is a great fund around here. We were talking about it in I've never had those guys on my show. I need to though. But anyway, these guys do a great job, especially if you don't need quite as much yield as Defiance. But these are risky funds like Defiance, maybe a little less risky because they're a little less yieldy. But in any event, they do a great job. Well, so look at triple QDTE since the top. They're outperforming YMAX. I mean, that's pretty impressive, I think. Now let's see. They paid $420 for a quarter year in this. So this is easy math. So that'd be 1680. We'll call it $17. They pay about $17 a year at this rate. And this rate won't necessarily continue exactly like it, but 17 on a price of 36, that's about a clip of about 50%. YMAX over the same time was paying 10 on 14. YMAX is actually paying, I don't know, a little bit more. All right. Well, anyway, that's QDT is impressive. Let's look at QDT next to or next to SPY-I. SPY-I is a really good one. Really, really good. When you're just looking for good, steady results. Now, look at that. SPY-I beating QDT, and people love QDT, but it's just over a certain time period. SPY-I did better into this pullback, quite a bit better. Anyway, all right. Well, I'm going to quit talking about that stuff. I could talk about that stuff all day, but yeah, I'll compare whatever. CLM to CRF. Okay. Hey, Red Sox, how are you doing? Okay, let's do that. Now, those compare really well also. Let's just do QDT let's do SPY-I. SPY-I is the champion right now because we're just testing the pullback. Let's do SPY-I in the pullback to CLM. Okay, boy, CLM was spanking it, but then it got hurt in the pullback. CLM's a little bit of a different deal because they have the rights offerings, and there's, saying that I know that kind of stuff isn't going to show up on the chart, but still. It's, let's see how CLM is paying. So they paid over a quarter year. They paid 50 cents. Well, call it 50 cents. So that's $2 for a year on something that cost $8. That's about a clip of about a 25%. That's fine. I mean, that's great. Now SPY-I, let's just add theirs up real quick. They paid $1.55. We called $1.50 over a quarter year. So that's $6 for a year. And they cost about 50. And if you pay $6 and you cost 50, what is that? 12%, right? It's perfect 12%. Okay. So it just depends on what you're looking for. If 12% is enough for you, SPY-I or JEPQ, or JEPQ doesn't pay quite that much, but there's tons of good funds out there. Let's do Alti versus CLN. All right. Well, let's check this one out here. Well, we should check out Alti versus SPY-I. Well, no, we know Alti's going to get beat by SPY. We'll just do this. CLM versus Alti. And this is off the high though. So man, CLM, yeah, good looking chart here. I mean, yeah, what's not to like on CLM? What's not to like on CLM? But on Alti, there's extra risk for sure. But let's add up the dividends again. So $1.80 on a quarter year. That's $7.20 for a year. At this pace, $7.20 on something that costs $6.79. That's why you have some extra risk in there. They're giving you some of you're taking some risk in the form of that. But there's so many good funds out there and good choices out there. I like what I'm doing. Why doesn't anyone do this? No one else is as scared of losing money as I am, I guess. But I like something like these two as a pair. They're almost perfectly inverse of each other, but they can make a decent hedge for each other. This is what I have now. YQQQ. And I have about a quarter of my portfolio in it, and then 3/4 of my portfolio in bullish assets. And so the theory is I make a little bit less on wildly bullish days, like yesterday. I underperform, but on days where the market goes nowhere or down, my portfolio outperforms. But anyway, I think a good portfolio, I just like that. I like nowadays, you can just do this the past couple of months, the past 6 months, that you can invest in inverse funds. Now, was it the right thing to do? Because look at this. I mean, let's talk the market for a second. Let's look at the SPY. I'm going to put the 200-day moving average on here, and when I go back and forth between the shorter time frames, I shouldn't do that anymore. I need to just keep it on the shorter time frame or keep it on the longer time frame. All right, so here's the thing. Okay, see this SMA? Oh yeah, SMA right here. I had it on the 2600 period moving average. That's because it was on the 30-minute chart. To do the 200 period moving average, you have to type in 2600. You have 2600 30-minute periods is the same thing as 200 daily periods as far as the stock market goes. All right, well, here's the 200 period moving average. You can see we perfectly gapped over it yesterday. And now today's action, we're over yesterday's high, and as long as we stay above that, presumably we'll keep trying to go higher until we find sellers. But look at this. So what happened? The market here's what happened. January, there's the day I bought right there. So I'm in at 604 when the SPY was at 604. It did go a little bit higher into January, but I should have started hedging. But anyway, but should have I even see? So the market started going down, and when it started to take out this low, I could tell I thought it was gonna get ugly. So I hedged and I put a bunch of short funds in. Well, we're right back to the point where I hedged at, because it was on, or actually, I think I hedged on the 28th of February. But anyway, I hedged around when the market was around 585. But we're approaching that point again. So so had I just kept my original bullish allocation, we're right back where we started from. I probably would have been fine. I mean, but I'm also using a little judgment, and I don't think we go right back to bullish. I think that I have a feeling that we'll get back under the 200-day, but at some point maybe not. So at some point I will have to go back to a bullish allocation. But yeah, that's always the eternal question, because it's like they always tell you when you're learning how to cook something, or my mom used to tell me, a good cook doesn't play with the food. You don't have to check it every a good cook. And then also one of my best friends is a professional chef, and he's taught me how to cook in recent years. And that's anyway, you don't play with the stuff. Don't mess with stuff. The market, lots of people that are in the market, people like Warren Buffett will tell you the same thing. Don't touch it. Stay in growth and don't touch it. So who knows? It'd be interesting to see. If I made the right decision by hedging. I may not have. And probably if we get back to 585 and get above that, at some point I'll probably have to throw in the towel and just go back to a bullish portfolio. I'll probably keep maybe 10% of the inverse fund, 10 or 15%. But I'll trade in my inverse NVIDIA and inverse Coinbase. I do not want to be inverse NVIDIA and inverse Coinbase if the market goes back into a face ripping rally mode, which it very well could. I don't see it happening. And like I say, this is the bear's last stand is right here at this gap, in my opinion. So if you look at a chart of NVIDIA, a daily chart, and I like the trend. The trend is still definitely down. Now, it does look like they're, a potential head and shoulders bottom they could be trying to put in here or whatever. But until NVIDIA gets back above its 200-day, but when NVIDIA gets back above its 200-day, then I'm probably going to have to cash in that dips position. But that could also not happen. This could turn out to be a great investment. A lot of people say that Mac 7's, done and gone, dead, and we're rotating into, different times and different leaderships taking over. It has been taking over. You can see because some of these ones have been pulling back so far. Somebody was talking about Planeteer. Somebody in my Discord, man, this thing is what NVIDIA was a year ago or what Apple was 20 years ago. I mean, this thing is just, look at you just can't be shorted. I mean, it's just, my gosh. Let's see the last time it was under its 200-day moving average. Never. It was it was in 2022 when everything was under their 200-day average. In fact, boy, that would have been a great time to buy it. Pick up some shares at $6.09. Pick up 1,000 shares at $6.09, and you're sitting here freaking with 95,000 right now, $95,000 worth of shares. All right, guys. Well, I'm gonna let you guys go. I'm getting tired of talking, but anyway, risk with Alti. Love everything about it. Such a change of formula. Well, it's the same risk with Alti as with any of these funds. The risk is a prolonged bear market. So, but the reason I'm not that worried about that is because any money that I put in Alti, it came out of other stock market investments that would have also been. I'm not putting new money in other words. I'm just moving money around at this point. Everything's going to do bad if that happens to the market. And of course, I'm not going to let that happen to me because as long as we stay under the 200-day moving average, I'm going to have some inverse funds where I outperform on the downside. But in any event, that's the risk is a prolonged bear market. The risk is, okay, I've been watching Alti. I've been watching Alti for a year and I've been paper trading it and or I've been spending the dividends in my head and I could buy $30,000 worth of Alti and I could pay off 3 credit cards and man, that would be awesome. Yeah, absolutely. So you do that though. You're doing that and you say, okay, I'm going to pull the trigger. I'm going to do it tomorrow. So you sell your shares and do it. And then for whatever reason, tomorrow starts 2008, 2009. I'm not saying it's going to, but you don't know in there. You aren't going to know in advance. That's your risk. That's, because then you're going to be able to pay your credit cards down a little. Yeah, you'll be able to pay your credit cards down, but your NAV will get, that even though Alti's a great fund and stuff, your NAV will get killed. But anyway, keep watching this channel because what a person could do in that situation is maybe go half Alti and half white triple Q. I mean, if it got really bad, if we got into it prolonged under the 200 period moving average, just get half of each and be like a hedge fund, be a long short. And because bear markets do have face ripping rallies where bullish ideas can profit sometimes, but you'll need a lot of short deltas. Anyway, keep watching the station. I don't think that's going to happen. I mean, or actually I kind of do. I kind of wouldn't be surprised, but we'll see. So far I've been wrong. Every day that we stay above the 200-day, it's one day stronger for the bulls. And every time the bulls can take back a trading range. That's why I'm always looking at it like a football game. They're trading ranges and it's bullish territory and bearish territory. But also if you're an option trader, those knowing where that territory is gives you good places to set hedges and stuff. That's why else I look at it. All right, guys. Well, I appreciate it. But yeah, the risk with any of these funds is a prolonged bear market. As long as we have a mean reverting market where it may be down for a month, but then the next 3 months it's up, like it's been the past couple of years. Mean reverting market, yeah, these funds should all do decent. And you should be able, in theory, talk to your own planner, but in theory, you should, if the market will stay strong and you got a fund like Alti, you should be able to, in theory, maybe not use all the dividends, but maybe use a third of Alti's dividends and pay a credit card off with it. Yeah, as long as the market's strong and your NAV should be relatively stable too. But that it's not Alti's fault if the market drops 40%. Alti can't do anything about that. but we can do something about that. We can get YQQQ. All right, guys. Discord link. Yes, absolutely. Yeah. Thank you so much. Thank you so much for reminding me. I appreciate everyone being here. All right. Discord link. Discord link. There's so much cool stuff you can do with AI. I've got to have AI build me a Discord bot, and all this stuff could be automated. I should have also, anytime I do anything, it should be posted in my Discord. All right. Anyway, I'm just learning all this new technology, but I really am enjoying AI. I've been using a lot of Claude and a lot of for research, a lot of Claude and a lot of Grok. They're really good. All right, guys. I appreciate y'all for being here. You have a great day, and I will talk to you later. Hit me up in Discord if you want to shoot the breeze. All right. See ya.